So what is a reverse mortgage? Basically, we borrow money against the value of the home. So you have to have a home. Then you can borrow money from that home, right? And you can take it as a lump sum, or also you can take it as a fixed monthly payment. In United States, they have several options. You can like take one lump sum just one time, or you can take monthly every month, or you can take mix of both. We've got lump sum and also the fixed monthly payment. But in Malaysia, we have two types. One is you only take the fixed monthly payment, right? The second type is you mix together. You take a little bit of lump sum and plus the fixed monthly payment. Loan payments are not required during your lifetime. That means when you borrow this money, you don't have to pay. You don't have to pay back. Okay, so that's why it's called reverse mortgage, right? You don't have to pay back on. You only pay back when something happens. When it's only payable, it's meant you exit when the borrower dies. That means the person die, and then or they move out permanently, they don't stay there anymore, right? Or they sell the house. And when you sell it, then you have to pay back the loan if you sell the house. If you do nothing, you just stay in the home, you can still receive that monthly payment until the day you die, right? So the catch is the interest and the profit rate is actually 5.9%. So this is the most important thing I want to know only. When I look at the reverse mortgage, I want to find, okay, what's the interest they charge? Oh, 5.9%. Okay. Okay. And then there's one-time recourse waiver fee. This is a very long name, one-time recourse waiver fee, or you call it facility fee, which is 1.75% of the property value. So if 1 million, it will be 17,500, right? But just now we saw that the expenses is actually 37,500. So there's 20,000 extra. So what's that 20,000, right? You have to ask more details, but it includes other fees, like property valuation fees. They have to value a property, make sure that it's worth 1 million. So there are legal fees involved because there'll be loan agreement, everything. So you have to pay the lawyer. So there'll be legal fees. And then I think it also covers the fire insurance Takafu coverage for the property. They require fire insurance to be bought for that property. Absolutely, I would say the person who really want this reverse mortgage is that you don't have other assets already. You don't have other liquid assets. You don't have money, but you have a house. And you still need to stay in that house.
Unless you
then reverse mortgage might be the only solution.
Unless you say you are old already, and then let's say you have kids, your kids don't want to give you your monthly, don't want to
no income no income and then you want to work also no income because nobody want to hire you. No, that means you're too old to work. Then what's left is I only have that house. That's the only house I have. Then reverse mortgage is your solution. So as a conclusion, right, it is also a form of loan. So when it comes to loan, I like loans when the interest is low. So I guess you can make decision for yourself. Mortgage loan is lower than reverse mortgage. So it's best that when you have income, you can still do mortgage. Then you do the mortgage rather than wait until you have nothing and you have to depend on that house and you have to take money from that house for your daily expenses. If you put yourself in that kind of situation, then there's no choice. You have to take this reverse mortgage. So hopefully after this session, you want to put yourself in a situation where you will never end up having the necessity to use a reverse mortgage as your last resort, right? Don't let yourself fall into that kind of situation.